So I know that we have a lot to cover. Why don't I go ahead and just start with a quick welcome and give a little bit of context as to who the group is that's hosting this, and then also a little bit about myself. And then we'll also have Jagjit and Anu say a quick hello from the MIT Club of Southern California, and then we'll get in with the panelists. So good morning, good afternoon, good evening to everyone. I'm Adela Jamal on behalf of AMITA, which is the MIT alumni group. Really excited to have everybody here for a very special female founder funder panel, and also during Women's History Month, which was great. It was sort of a challenge to get everybody here, but we've had a great response with over 250 registrations. So welcome everyone. I'm going to pass it over to Anu and Jagjit just to say a quick welcome on behalf of the MIT CSC Club, so that you also know who they are and also what the events that they're going to be leading. So Anu, Jagjit, do you want to say a quick hello?
Sure. Hi, my name is Anu. I'm the current president of the MIT Club of Southern California, and we're just honored and excited to partner with Adela and AMITA and Midas for Women's History Month to present this great event. We're the alumni group here in Southern California, ranging from Santa Barbara all the way to the Arizona desert and down to the San Diego County border. So we have a lot of great events. We have a lot of great initiatives in service and supporting our communities with service events like a beach cleanup coming up next week, educational counselor support and admit student and send off student events, and of course, current students that are at MIT. We provide a lot of resources and support for them as well. So join our club, follow us on social media and our event page on Hivebright. I'll put a link in the chat. And I'd like to also introduce Jagjit, who's our VP of Sloan programs for the club. And he's the one that brings these great events to us.
Sure. No, thanks, Anu. I'm Jagjit Dhaliwal. I goes by JD, VP for Sloan Los Angeles chapter, working with Anu and Adela very closely to bring in these kind of events to our community. I graduated from MIT Sloan in 2021. And I'm really honored and privileged to be associated with Adela. Adela has brought in a lot of these events in the past, and she and I have been always looking for how we can bring in these kind of events every month. So if you have any other ideas or topics in mind, feel free to reach out to either of us. It's always proud to have Adela as a colleague, as a friend. She's MIT Sloan graduate, so proud of her being how she's contributing back to the community. So with that, Adela, over to you, and thanks for having us.
Thank you.
I'll also add that Southern California is Adela's home when she's actually at home. So we're so happy to have her in our community.
Thanks, Anu. Thanks, Jagjit. Well, great to be partnering. I love seeing how all the groups have been coming together and bringing these, I would say really timely and interesting panels. And so keep an eye out for more. And maybe Anu and Jagjit can drop, links into the chat so you can learn more about their clubs, and then also Midas, because I know a lot of different events are coming up this year. And we really want to make sure that, especially for the virtual events, that we get everybody here, aware of them, because I know it's hard in the MIT ecosystem. There's so much happening. So if you have any questions, feel free to reach out directly. So with that said, I'm going to go ahead and give a quick introduction. So I'm Adela Jamal, for those of you who are just joining. I am a co-founder and also managing partner at Milemark Capital. We invest in early stage startups who are really focusing on that bullseye of innovative hubs, AI, and diversity. So please reach out if you'd like to connect, after the panel. And I also say the same thing for the rest of our panelists. The reason that we're here is to sort of interact with the community. So please reach out to Norma, Eileen, and Allegra as well. All of us are really here to support anything that is, of course, entrepreneurial, and especially female founder or funder. So with that, we're going to hear quick backgrounds from Norma, Eileen, and Allegra. So I want to just start with a big welcome to Norma Cadena. She is the managing partner at Supply Change Capital, and she has been part of the venture capital firm for over a number of years. And over the last 9 years, she's actually invested in over 75 companies across industries and stages. And prior to being an investor, Norma actually spent over a decade in the aerospace industry as an engineer and operations leader. So welcome, Norme. Thanks so much for being here.
Thank
Our
you.
next guest is Allegra Stennett. She is the co-founder at New Majority Capital, and they are actually an impact investing firm focused on small businesses, business acquisitions by underrepresented entrepreneurs. And I'm sure everyone's seen the great work they've been doing. They've had a number of really nice features through the MIT community. And prior to NMC, Allegra completed her MBA at Sloan and also got her EDM in Education Policy and Management at Harvard Graduate School of Education. Following completion of her undergraduate studies at Andrews University, Allegra was a banker at JP Morgan in New York for 5 years and split her time equally across investment banking and commercial banking. Welcome, Allegra.
Thank you. Glad to be here.
And our next panelist is Eileen Tanghal. She's the managing director and co-founder at Black Opal Ventures. They are an early stage venture capital fund investing in hard tech healthcare. Eileen has almost 20 years of VC experience and has been involved with and sat on the boards of 40 high-tech startup companies in the US and in Europe as a financial VC, corporate VC, and on behalf of the US intelligence community. Welcome, Eileen.
Thank you. Great to be here.
All right, so hopefully everybody can see the panelists and hear everybody okay. So we're going to jump into a few questions, but I always like to share with the audience that the chat is open. If you would like to put in, your comments, your questions, feel free. And if we have time at the end, we will actually jump to the questions from the chat. So I understand that we've got a really nice blend of attendees today. We've got individuals who are entrepreneurs, who are making pivots, who are funders, who are just curious about the whole entrepreneurial ecosystem. So we're going to start off with the first question for the panelists to just share a little bit more about who they are and then also what their fund is focused on, just to give a little bit more of the foundational background. So maybe we can start with you, Norma.
Sure, happy to. By way of background and journey, I graduated from MIT as a course tour in 2003, and then I spent over 10 years in the aerospace sector. I pivoted to VC in 2015, really looking for the intersection that was the place where I wanted to be, which was moving innovation forward, creating opportunities for folks, and then building community to make things go faster, to improve flow. And so I've been investing since 2015 across a variety of sectors, but Supply Chain Capital is the firm that I co-founded in late 2020. We're an early stage VC firm out of both Los Angeles and Chicago, and we're focused on investing in healthier and regenerative food and ag systems for people and the planet. And so this is really focused around 4 core areas. The first is environment adaptation and mitigation solutions, thinking about waste, water, and soil. Secondly, modern conveniences in service of healthy habits. So think about modern living and some of our heritage and cultural needs. Thirdly, novel ingredients and materials. And then fourth, where our name comes from, supply chain effectiveness or value chain effectiveness all across the food and ag ecosystem. So these are the areas where we invest. We've made 18 investments over the last 2.5 years, anywhere from 200K to 2 million, so preferably pre-seed and seed.
Wonderful, Norma. Thank you. And I have to add that I had a chance to meet Norma finally in person while we were in Southern California, and I've just been, such a fan of what she and Shana have built with supply chain. So if you haven't had a chance to interact with Norma and her team, certainly reach out and check them out on LinkedIn. I know they've been very active. So the next guest is Eileen. I'd love to pass it over to Eileen just to share more about her background, and also, how she got into the role that she's in today.
Actually, my story for Black Opal is very much an AMITA story, which I'll talk about in a second. So I am a class of 97, course 6 undergrad from MIT. After MIT, I came to the Bay Area and joined what was a 5-person startup company that was venture backed and grew from, that small startup into a publicly traded company called PDF Solutions, which is still public today. So I had in my early career being at a successful venture backed startup. I then read my MBA in London and became a venture capitalist in 2002, working for one of the first female, or I should say 50-50 female led VC funds called Amadeus Capital Partners. So I was very lucky to have a female mentor in venture capital, a woman by the name of Anne Glover, one of the very first female heads of the British Venture Capital Association, one of the only women who ever sat on the board of the Bank of England, as my mentor. So she really, paid it forward and always had a female associate on her team. And I went up the venture capital ladder, was an associate, a principal. Then I ran the venture capital fund of Applied Materials. I was VP of New Business Ventures at ARM. And then about 6 years ago was recruited to work for InQtel, which is the venture capital fund of the Defense and Intelligence Agencies, specifically the CIA's venture fund, as people like to say. And it is there where about 4 years ago, when I was on a retreat with my other fellow MIT sorority sisters, that I noticed that a lot of the tech that I was investing in my sector was very relevant to their sector. So most of my MIT girlfriend classmates, sorority sisters, are executives in healthcare and life science. And we could see that the tech that the agencies were using was completely relevant to what they needed. So we started as this group of MIT women doing angel investing together. And then that developed into what you see today, which is Black Opal, which is a venture fund, which is institutionally backed by large pharmaceutical companies, banks, and healthcare industries, and a lot of tech executives. So we were in an early stage venture capital fund investing at this collision of hard tech and healthcare and life sciences. I'm based in the Bay Area. My co-founder, who is also class of 97, based in New York. We are a $62 million fund. We have 11 portfolio companies, and we have what is called a 4D strategy, underpinned by 2 C's and an A. So the 4 Ds are: we invest in next-gen diagnostics, delivery of care, drug discovery, and finally, data and AI, and looking at how healthcare and life sciences ecosystem can be disrupted through changes in compute, connectivity, and AI. But we started with MIT women investing together, then turned us in. And I'm very proud to say we have a lot of MIT women who are individual investors in our fund.
Phenomenal, Eileen. Thank you so much for sharing that. And can't wait to hear, more about just what you've seen, as you mentioned, lots of shifts happening, and also just with hard tech. So I'll pass it over to Allegra as well, so we can hear more about her background and also what her company is doing and how she got into being an investor.
Sure. Thanks, Adela. Hello, everyone. I actually became an investor by accident. It was a happy accident. I had co-founded a fintech startup while I was at MIT. Did that for a year and decided I wanted to do something different. And then a classmate of mine, Daryl, actually called me and said, "Hey, I hear you're interested in the ETA space, which is entrepreneurship through acquisition." And this was my December before my last semester of business school. And the rest is history. Met 2 other guys who he had met, Abel and Chris. We met in February in one meeting. We all decided, okay, we're going to start something. And we started New Majority Capital. So NMC, we are an impact investing firm, private equity fund, $50 million fund, which we're currently raising. And we help entrepreneurs acquire existing small businesses. So we don't really focus on startups. We focus on the entrepreneurship through acquisition model. So acquiring businesses, typically $500,000 to $2 million in EBITDA. And we also run an accelerator. It's a 10-week program called Beta that provides the training to go about the process of acquiring a business. We're on cohort number 4 starting next month. Cohort 3, which is currently underway, has 40 entrepreneurs in it. So you can imagine it's quite a happy, rowdy group. And we had 12 acquisitions last year. Average check size for our fund is 1.3 million. And yeah, so that's what I do on a daily basis. Glad to be here. Glad to see some classmates. Claire, Lillian, that I saw in the picture. Sorry if I missed anyone else. Claire is also a female founder, so Eileen might need to make some connections there. But nice to be here.
Thanks so much, Allegra. And, I love that we have such a nice variety in our panelists because everybody has a very unique journey, getting them to where they are today. And then even Allegra, as you mentioned, entrepreneurship through acquisition is probably new to a lot of folks. So really excited for you to share that so that everyone's really aware of the whole kind of spectrum and, what it means and what the different avenues are to get into entrepreneurship. So I'm going to pass over the next question to Nora May, because there's so much to dive into. And for those of you, that might be new to this sort of world, a funder or a founder, Nora May, could you describe the funder landscape today and also how it's changed over the years? And then, of course, if Eileen and Allegra want to jump in after, they certainly can.
Yes, absolutely. So let's talk about 2023 venture capital landscape, right? Number of deals on the order of 13,600, valued at about 170 billion, down from 2022, down from 2021. Actually almost half of the deal value of 2021. But still $170 billion invested in early stage not early stage companies, across the venture capital landscape. What's happened in the last several years is a rise in micro VCs, and micro VCs are every single firm we've talked about today, right? Any firm that is under 100 million is one of the definitions of micro VC. There are a few, but it is one of the standards. So according to Crunchbase, the number of micro VCs has risen by something like 120% in the last 3 years. A lot of these are people who have left larger firms, who have spun out to create their own firms, or who simply see an opportunity and are creating a firm to really capitalize on the gap they foresee. And what can those gaps be, right? When we think about venture capital dollars and who receives this 170 billion in 2023, less than 2% of that capital goes toward female entrepreneurs. And so that is one of the big gaps that I think many emerging fund managers or micro VCs are tackling now. And it's an uphill battle, right? When we think about the about $107 billion raised by venture firms worldwide, only about 3% of that capital went to firms that are led by women. So you see that trickle down effect, but also a really big opportunity for us to step in and make decisions a little differently. And I think we've all experienced what can happen when we have increased relatability and a different lens by which we evaluate deals. And so I know we're here to talk about Women's History Month, and these are crucial statistics as we think about why the status quo is as it is. Anything, Allegra or Eileen, you want to add in terms of stats or current state of VC?
Thanks for that, Nora May. I know Eileen and I were we were just chatting before the official event started, so she's got some really interesting background to add. And I'll also just say, for the audience who's probably unaware of the stats as Nora May was getting into them, even just having Nora May and Eileen, Allegra, and myself here, looking at women who are in a position of power, even at funds, is super interesting. You're probably looking at, the 5%, especially because everybody comes from diverse backgrounds. So incredible to see, you know, what all of you have accomplished, and then also the work that still needs to be done. Eileen, I know you've got some really cool history and insights to share. Would you like to add on to what Normie just mentioned?
Yes, definitely. So I'm just trying to pull it up, but so you know, Deloitte and we have a couple partners from Deloitte who are investors, and Black Opal does do an annual diversity and venture capital survey. So I will find it and put it into the chat, or maybe you can you know, give it to everyone. So I'd say you know, all the stats Norme stated, absolutely, it's gotten better, but it's still got a long way to go. But you know, I've been in the industry now for 22 years, and what I was going to say is the following, which is when I started as an associate in venture capital, probably there were 20 to 25% female associates, right? So that should translate, if everybody made it up the chain, to 25% GPs, right? That's if everybody made it. Now, what I saw is that most people, many women were just dropping out, and there's a lot of reasons for it. So there was a pivotal moment when Ellen was brave enough to go up and sue Kleiner, right? And then right after that, of course, All Race started. And so, you know, for the first from 2000 to 2000 and whenever she did that, so it's 2015. If you are a female in venture capital or female funder and things were happening to you, the best thing for you to do is to be quiet, take it, and keep going, because it didn't help you to expose what was going on. You know, that it would make you kind of an untouchable person if you started complaining. So that shift happened when, again, Ellen and Eileen were brave enough to do what they did. So that's great for everyone who has now been here since 2015, 16. So that's one really major shift, and we should applaud those women for standing up for the rest of us. The second thing I'm going to say is this is the third downturn that I've been in. Right. So I graduated in 97. I was in the frothy.com in 2000s. I was also a venture capitalist in 2008. Now we're seeing it again. So what's happened, I think, is when you're going through these downturns, people tend to do this barbell strategy. And the barbell strategy is as follows. They either do a lot of seed investing because they can hold off for a while, right? If you do seeds, it's lower checks. You can wait. You can make promises to your investors that things will get better and that they will give you a longer runway. The other part of the barbell is later stage, very well-known quantities of you know the company's doing well, it's hit its revenues, it's at the point where you know it can exit in a couple of years. So that's what's going to happen. I mean, because this is what happened in 2000, this is what happened in 2008. The next thing that's happening is secondary markets are going to happen, which is a lot of people, I'll call them venture voyeurs. So they'd never seen a downturn. They thought venture capital was a great way to make money because people weren't going public and they couldn't be in growth equity. They start venturing down. So I'll pick on them a little bit, like, let's call it, actually, I won't pick on them. You know who I'm talking about. These are the hedge fund people that started becoming crossover people. Okay. So they're out and their positions are sort of abandoned. So this is a good time to be in a secondaries market to buy those positions that they are no longer in venture capital. This is what happened in 2000, by the way. This is also what happened in the financial crisis. This is going to happen again. So that's kind of the two trends I've seen. Is there was a big shift with Eileen Lee and Ellen Powell coming in to sort of raise the awareness of the sexism that was going on in the venture capital ecosystem and trying to change it and open it up to everybody else. And then, of course, we're still in a downturn. So this bifurcation of our barbell strategies for investing is what we're going to see. So if I were you as a founder, I would go say you're a seed company or go put yourself into a series C or D. That in between sort of valley of death is not great for anybody. That is when you see I need another bridge to get me to the B. I need another bridge to get me to the C kind of situation. If you are in that situation, I would think very hard about repricing and making yourself look more like a seed company again. So that's sort of the things. Now, I think you have another question in there about the shifts in areas, but I'll stop and let you ask.
Really helpful, Eileen. Thank you. And, I think it's so important to sort of step back for everyone who's, here and just understanding how those changes have happened, what really caused those changes. And then to Eileen, your point, having been through at least one or two downturns, right? There's so much to learn from at each iteration. And also understanding that there's a lot of noise to actually wade through. So especially if you're building, to Eileen's point, what's happening on the capital side, what are they looking for? And then also maybe that repositioning that needs to be done, I think a lot of times is overlooked. Norma or Allegra, would you like to add anything on to sort of what you've seen from a landscape perspective?
Yeah, I can add it, referring to ETA. So the ETA space, acquisition space, it's about 90% white male. And so funds like ours, we're looking to diversify that space. We're seeing, one of the main trends is that multiples are just skyrocketing, and we hope with, interest rates will come down this year. But we're at a unique time right now because we are what's called the silver tsunami, where every single day, 10,000 baby boomers are retiring. And with that, over the next 25 years, 12 million businesses will be available for sale. It'll be the greatest wealth transfer in our lifetime. And so we're looking to make sure that, women, people of color are participating in that wealth transfer from an ownership perspective of these businesses. So I think that is a trend that we're hoping to see continue to trend positively. But historically, the ETA space has been like a hidden gem. And so just to give you an anecdote of that, I found out about ETA my last semester of business school, and I was heavily involved in all things entrepreneurship at MIT. And so even at these, bastions of academic prowess, the ETA industry is very hidden. And so we're looking to make sure that can be democratized so that, many of us on this call can participate in that.
So important, Allegra. Thank you for sharing that. And Allegra, maybe you can answer just for, the lens of sort of getting into, where you've been, and especially for anyone that's making that pivot. Is there anything else that they should know about ETA?
There's a lot to know about ETA. I'm trying to think from what perspective, like just going into it. So I guess I'll start here. Many of the companies that you know and love were not started via startups. They were actually small businesses that were acquired. So for example, Starbucks. Howard Schultz went around and bought coffee shops that already had cash flow, customers, reputation, etc., and branded it under the Starbucks, banner. Same thing for Delta Airlines, same thing for Chobani Yogurt, same thing for ABC News, and the list goes on. So it is a very viable path to achieve, great success in the entrepreneurial sphere. So a lot of times you might not know the acronyms or the words, ETA, but you for sure, ETA stands for Entrepreneurship Through Acquisition. You for sure know companies that have gone through that route of entrepreneurship.
Thank you. I think that background, that little bit of clarity is also helpful for the audience. So I'm going to go back to Eileen. So Eileen, you were talking about the landscape, female funders, founders, a lot of changes there. Could you share a little bit more about what you're seeing happening with the female founders and funders, and then also what might be coming next?
So yes, so a couple things. If you were to just maybe look at the successful venture capital funds raised by women and the companies they backed over the last, call it 7 to 10 years, there's a heavy investment in, I would call it consumer. So consumer, so even Eileen Lee, Foresight Forerunner, Kristen, sorry, is it Kirsten or Kristen? I'm botching it right now. their funds were focused on consumer. I think what I've seen now is a lot of women really focusing in what I would call impact sectors. So healthcare, education, and climate. So that seems to be where many of the female venture capitalists and founders want to be, because it isn't just about making money for investors. It's also, can I make an impact in the world that we live in? I had the opportunity to work at effectively 5 different funds, and the one that had the most women on the team was indeed InQtel, which was the one that was the not-for-profit impact VC. And so I think that's where I see the change now. What I hope will come from that is that, unlike when I started with the 25% associate class, not leading to only maybe, let's call it 14%, if I'm being generous, GPs. What I'm hoping now is you see 50% associates, and I'm hoping that 50% will translate into 50% GPs, call it 10 years from now. And that it won't just be, oh, hey, it's a female-led fund, they're probably doing something in the consumer section, makeup or clothes or fashion, that it's a female-led fund making a change in healthcare, education, climate, but that we even also will see the traditional VCs where you see them doing, I mean, this is an MIT panel anyway, right? So, there's a lot of engineers hopefully here. So a lot more women leading the hard tech VC funds. And so when we think of the Sequoias and the Andreessens and the NEAs, that their GPs are going to be more and more women. There isn't just going to be the token woman, one GP there. That's what I would like to see, is that 50% associate class gets up into the GP level, and it isn't just fashion, and that it's these impact sectors, but also the traditional, deep tech areas, that's where there's a lot of money that have been made. A lot of money has been made. So.
Yeah, thanks, Eileen. Thanks for that context. And I would also add, what I've been noticing is that we have a lot of shift certainly happening, but then also a lot of women are building with that passion and that intention, right? And that really resonates in what they're solving for. And just think of, fintech, think of really what's going to happen with this next wave, as we talked about, the shift of wealth, thinking of solving for families. It's usually the female founders who are stepping in saying, look, I've experienced this problem personally, and let me go out there and create a solution. And so I love now, seeing what's coming out, whether it's on the fintech side, whether it's on healthcare, right? Whether it's for the care economy. And I think, for anyone that's interested, really just take a look at that, that massive sort of adjustment. And then, of course, for the folks who are in that Boston area, right? So much happening with healthcare, and so many incredible female founders who are building there. So I think that's another sort of wave that I'm very proud to see. And if there's, conversation there and people have questions, feel free to reach out. So I'm going to move along, just because we do have limited time with everybody. We talked about the shift with female founders and funders. Eileen added a lot of really great sort of, foundational information, even just thinking of what's happening over the last 2 decades. Norma, a question for you. So for a lot of the audience, we know that they are pivoting, they're trying to get into the startup scene, or maybe they're spinning up, their 3rd and 4th startup. And there are a ton of different paths, as we mentioned, to get into entrepreneurship. What are your thoughts on, the programs out there? We've got incubators, we've got studios, you've got YC, you've got Techstars. What are your thoughts on, what's the most effective way to either, make that pivot, or even to just to start out?
Yeah. The landscape, even the landscape of accelerators has changed in the last couple of months, right? We've seen several of these programs shut down. I saw in the chat someone was asking about the academia track, and I think that one's interesting. UC Davis, for example, has a pretty interesting program where they pair PhD and postdoc students with venture capital firms to get them to think about how to potentially commercialize their research. So I think there are some university programs that are starting to team with VC and offer opportunities for students to work shoulder to shoulder with venture capitalists. So we've supported this program for the last 2 years and have had 2 PhD fellows who have gone on. One of them went on to be hired by a strategic. So it's been an interesting route. But in terms of other programs, I mean, I think if you're a founder, a first-time founder, then the structure, the social capital, and the milestones that are driven by a program like a YC or a Techstars would be helpful. If you're a second-time founder or you have a strong network within your own university or your own classmates, then I don't necessarily see the strong value there with either an incubator or a venture studio program. In fact, I do see a lot of these programs continue to fall and close. I know Techstars announced recently they were closing several of their programs all around the country. So before Supply Chain Capital, I ran a firm in Los Angeles that also had an accelerator program from 2015 to 2019. And what we saw even in those 4 years was less and less interest by founders to follow a prescribed program, especially if it was residential, right? They wanted help only when they wanted help. And beyond that, they wanted to be left alone to work. So if you are the type of person who needs the structure to be effective, then definitely look into one of these programs. But if you are looking for help when you need the help, then I think an early stage VC firm that is really hands-on is a better place to go.
Thanks so much for that, Norma. Clearly a lot of different resources and also different timing, I think, to leverage is something that people might not really be aware of, right? There's a certain time, a certain point that you might want to get into an incubator or an accelerator, and then also being really aware of, what that means and what that's going to cost you, right? So of course, support is there, but sometimes it's at a price. Maybe it's going to be for 1%. You kind of get into these programs. Eileen, I'd actually like to see also what you think, because you're based in the Bay Area. And of course, the VC scene, the startup scene there has sort of been leading the charge, if you will. What are your thoughts on just the resources or any of these programs that are still underway?
Yeah, I do think there are a lot more programs available. Do I have a strong opinion one way or another? Not really. I think, I always say this, which is, if you're going to have a company, you need the 3 strong legs of the stool, right? You need somebody who is very strong technically or on the product side, someone who's very strong commercially, and then someone who's very strong operationally. And the commercial person can also be the one that finds the funding. So if you don't have that naturally, either from wherever you're coming from, then I would say, if one of these programs can help you find those other 2 people, then I would say join it. So, whether it's like, one of the deals that we invested in, 2 female co-CEOs, they actually found each other because they both signed up for Y Combinator, and they put them together. And one is very strong on the commercial side, and one is very strong on the product side. So, there isn't any specific incubator I would go to. I would just say, think about your need. And if you are very self-aware and you want to succeed, you should make sure you have a team that has those 3 strong legs of your stool. So So that's, and I can see somebody just ask, you know, what qualities we're looking for. Hopefully that tells you a quality, at least on the team side. Right. I guess your other question is, you know, what about in the Bay Area? Are there any other specific places you'd go? You know, there's just so many resource. I think, you know, the other thing I would do is, depending on your specific sector, I would tend to go towards the incubator or the accelerator that can do something for your sector. Right. So if you're in fintech, then go check out Citibank's accelerator, or if you're in health tech, then go check out Redesign. You know, I that would be the only other perhaps obvious piece of advice.
I think that's really important. Thanks, Eileen. Just to sort of double down, not on maybe, you know, the generic options that are out there, but if it's really focused on sector, then you also get very much that catered response and experience. And I think that's a big part of, you know, what all of us are doing, right? Whether you're on the funding side, on the founder side, is to really do that research and then find very strategic partners, strategic advisors, and maybe even strategic programs to get into. So that being said, let me jump into the next question for Allegra. And I know we're also getting a lot of very similar questions in the chat about fundraising, what people are looking for. So we'll get into that in a minute. For Allegra, just from your side, you know, fundraising, of course, a really tough climate right now. What are your thoughts on what individuals can do to sort of, you know, balance that out and even make progress? Because we're still seeing a little bit of what we went through in 2023 trickle into 24.
Yeah. So I'll answer it with founders from a founder perspective and then from a funder and / investor perspective. So I think this environment, or any tough environment, kind of separates the wheat from the tares, so to speak. And so you really have to be clear on your value proposition. I think getting feedback on as many no's as possible is super valuable, right? Because your pitch deck is a dynamic document that is continuously changing, perhaps on, you know, multiple times a week, depending on how often you're pitching. So I think that's really valuable. And then talking to your yeses and asking them to introduce you to other potential yeses. So we did that. I think that applies to both sides. We did that from a fundraising perspective. Like, you know, some of our investors have said, hey, make a list of 10 people that you would like to meet and we'll make intros for you. So that's super helpful. That's like a quick thing that your current investor should be able to do. Your board members should be able to do, right? They're in it to see your company succeed. So those are just a few practical tips. On the investor side, I think follow-up is so important. You'd be surprised as the amount of potential yeses that are just buried in your email because you haven't followed up, and being persistent and actually setting, you know, processes in place, whether it's leveraging AI or, you know, having an assistant or something, or, you know, a CRM sort of platform. Those are things that can greatly improve, because visibility is important. Investors that see that appreciate persistence, that are busy, will appreciate you reaching out, and it'll just separate you from the startup that hasn't followed up with them in 6 months. So those are some practical tips.
Thanks, Allegra. Really helpful. And maybe I can just ask Norma and Eileen also to comment, because we've got a number of the very similar questions here in the chat. So to the point around, you know, tough climate, what we can do, especially for founders reaching out. Maybe Norma, Eileen, you can also just add some color on, you know, what are you really seeing as far as like the startups and the founders that stand out to you, and, you know, how you're sort of thinking through making that decision to, you know, back someone, or, you know, what kind of puts them on maybe the maybe list. I think that would be really helpful for the audience. So maybe Norma, if you'd like to start.
Sure. Sure. I think I've heard within our GP peer groups a lot of talk around going back to basics. And that's really around operational efficiency of a company. And so as we look at prospective investments this year, and this was true last year too, we're really digging into understanding COGS. We're thinking about we're looking at the pro formas for the next 4 years. We're running sensitivity analysis. You know, we're thinking about what happens if you get to half the revenue you've thought about and your costs are 30% more than you planned. What happens then? So we're scenario planning with many of our CEOs and really trying to get to whether they're flexible, they're coachable, whether they've thought about the down case. Um, they've of course thought about the, you know, the upside case, but we want to stress test them on all the different things that could potentially go wrong in terms of raw material, in terms of supply chain costs. And so that's really where a founder can differentiate themselves. If they're uh, if we see that they're thinking about operational costs as well, and that they've thought about different scenarios, and they're open to having these scenarios run by them. I think a founder that is inflexible and unwilling to think about bad case, bad case A, bad case B, would be one we would pass on.
Those are great points. Thanks, Narame. And maybe Eileen, you know, you've also sort of touched on what's happened and the shift. What are your thoughts on the, you know, the current landscape, and then also getting that outreach and really maybe guiding, or even just ensuring that, you know, you've got really the best talent in front of you, and that also, you know, being fair to really who's getting funded?
Yeah, I had the benefit of having a really amazing mentor, right? So Ann Glover from Amadeus, again, one of the first female venture capital led funds back in 1997. She taught me the rubric of what you look at, and we still continue this today. I've been using it for my entire career. It's 5 things. So whenever we looked at a company, we were looking at 5 things, right? Management, competitive positioning. Do you have people on your team, that 3-legged stool, plus, of course, if anybody has repeat entrepreneurship experience, that's great. Your competitive positioning, have you actually looked at the market to see you're just not another me too amongst competitors in the space? Do you have a technical differentiation, right? Then, you know, do you actually have a tech moat? And then finally, do you have any, call it customers, proof of concept customers? So that's on the qualitative point of view. So those are the 5 we're looking at. And then finally, a lot of the things that maybe the sophistication around truly understanding what it means to be a VC backed, right? So often what you'll find is what I would call pseudo lifestyle companies, meaning not enough ambition, like, oh, I'm okay if I grow like 1, 3, and then somebody buys me for 50 million. All right, well, that's great. You know, that's fine if it's just going to be your money. But if you take venture capital money, we need to see a 10x, and you need to show the path to the 10x. So that is not, I think one of the worst things that happened, I'm not sure, I think it's over the last 10 years, is I'm going to do this and then Google's going to buy me. I'm going to do this and then Amazon's going to buy me. Not, I'm going to do this and build an IPO-able company that can stand on its own, which is the kind of startup that I joined in 1997. And then something happened in the last 10 years of like, you know what, I'm just going to build this app and I'm going to get sold for. I really don't like that, because it means that you're just trying to build a product that somebody's going to buy. You're not trying to build a company that is strong on those 5 criteria that I just told you about. So what will tend to make us pass is the engineers that say, I have this really great thing that I was developing and now it's working and you should fund me for this. And they don't really think about the commercialization strategy through to the IPO of their company. So, you know, we are not, let's say, don't look at venture capitalists as like the corporation. We're not the Google that's funding your project. That's where I think the mistake is. We are venture capitalists that want you to become an IPO-able company.
Such an important point, Eileen. And Eileen, to that end, what do you think are the other avenues? Because I think knowing that VC is not always what you need is so important, right? And it's hard because individuals are probably seeing headlines and are thinking this is the way forward. Could you comment on the other ways that you could sustain, right? Especially in maybe the earlier years or even later on. Like what have you seen? What different models have you seen?
Yeah, I actually like the whole Kickstarter funding. I invested in 2 companies when I was in In-Q-Tel that were purely Kickstarter funded, and they were able to build their first prototypes with Kickstarter money, because that shows you that there's a demand for your product. So I actually do like the funding that goes that way. I'd say the other thing that I'm a big favor of course, we would expect this because I worked for In-Q-Tel. DARPA, ARPA-H. I mean, DARPA is one of the largest investors in all startup companies in the entire United States. In fact, the company I worked for as a startup was, DARPA funding. So DARPA, ARPA-H, this is again an MIT crowd. So go to the government research grants, and you actually have to also really think about, are you an R&D project or are you a company? If you're an R&D project, go to the government for funding. Do not go to venture capital or equity financing. That's the mistake I see people come in. It's like you look at it, you're like, you know what, this needs to be in the lab for a little bit longer before you come out. Because of what I said in terms of you need to get to commercialization, you need to get to an IPO state. Think about the amount of financing you need to raise to exit, and is it going to be a VC return for the VCs that come in? We're not funding a CTO type office project. So, but on that note, there are also big corporations that have grants for CTO funding, and you could go there too. But that's the, even AFRL, SIBRs, there's a lot of SIBR money out there. I'd say go there. Do not go to the venture capitalists yet.
Really helpful, Elaine. Thank you. And I know we just have a couple minutes left. So I think that's a great segue into some of the resources. And I know that folks are very interested just to understand, what else or where else can they learn about what's happening with, funding, how to best reach out. So open this up to Norma, Allegra, and Eileen. What are some of the resources that you think, are really important to highlight? Of course, we know that MIT has a ton of great resources, but more broadly speaking, Allegra, what are maybe some of your favorite, podcasts, blogs, platforms, or other resources that you think are very important for the audience to learn about?
Yeah, so there's quite a bit from an ETA perspective. So Acquiring Minds is like the main podcast in the ETA space. So I would highly recommend, listening or watching a few episodes on YouTube. The HBR Guide to Buying a Small Business is a book that's very helpful. From a, searchfunder.com essentially is the LinkedIn of the ETA space. So investors gather there, searchers gather there. They have a lot of different events, published research, lots of, resources for you to start your process. And then conferences are very helpful in the space. So MIT's conference just happened in February. And I think Harvard, Stanford, their conferences in the fall. Wharton's conference was last week. So conferences are very helpful because you get to meet investors and other searchers real time and can transact at those sorts of venues. So those are just some of the resources. I can drop some links in the chat.
That would be great. Thanks so much, Allegra. Yeah, maybe Eileen and Norma can do the same because there are a ton of great resources. All Raise also is another great place, and they have chapters around the nation. So if you're interested in, getting something more on the community base or just like learning, especially now with so much being virtual, I think that's a really, really good resource. Norma, anything else to add for resources or programs for the audience?
Yeah, maybe just quickly, how I built this as a podcast, and 20-minute VC, and I'll plop a few food and climate related ones in the chat as well.
Love that. Yeah, those two are really, really good resources. I also love what's the content from Ruffin. So Bridge Club has been really cool. Everything that's around, female founders and funders. So really easy listen, but you also get to then understand like what's happening maybe more recently and how people are pivoting. And then also, just getting into how to sort of like leverage that community. Eileen, any thoughts on that?
Yeah, my only other part is, the venture capital industry has a body of venture capitalists that come together as the NVCA. So National Venture Capital Association, so nvca.org. I often will point people that, that is where the human capital survey is. That is where you can get, I'm on their site now. If you want to start a fund and understand kind of what the documents look like, they also have something called LP office hours on there. So I know there was a question there about some tips to start your own fund. I would go to nvca.org, which is again the body for the venture capitalists.
Yes, that's a great one. So I know we're throwing a couple of links in the chat for everyone. I know everyone's scrambling to keep track of what we have. I will try to send out something later on as a recap, and we'll also try to share this and sort of post the recording so people can actually refer back to it. So we've got just 2 minutes here. Any final thoughts, Eileen, Nurme, Allegra, just on either, reaching out, leveraging your network, or anything that you think would be relevant, especially in this climate for female founders and funders?
So just maybe two things. One is it's okay to have a co-founder, right? So I think I'm going to go back to this. Not often, but sometimes we'll meet these, these women, very ambitious, and think they have to do everything by themselves to prove a point. And I'm not sure that's a good idea. So again, I know, you have your idea, you want to do it, but I would say it's better to have those three legs. So I actually think one way to change the entire venture capital ecosystem, it's not just, okay, now instead of having all male founders, we're going to have all female founders. I think we have to have mixed gender founding teams. And I think the stat is something like, even if you were to look at how many mixed gender founding teams are backed, it's only like 20%. So at the very least, we should increase the mixed gender founding teams up to 50. So that would mean, not just an all female led startup, but a mixed gender startup. So that would be one. The second thing I didn't mention it before, but one of my favorite books ever is called What Works for Women at Work. It's maybe a little bit dated, but I highly suggest it to everyone just to read. So the reason why I say this is important is because the reality is you are going to face bias as a female in this male-dominated industry. And what that book does is tries to give you some tips on how to deal with the bias. And so that's probably the last kind of tidbit I wanted to add. What works for women at work? I'll find it and put it in the chat.
Great, Eileen. Thank you so much. And yes, we are going to actually do a nice little recap email. So we'll send out the links. We'll send out a lot of these resources so that everybody has something to sort of take away with them. I know that we're at the hour here, so we're going to wrap up. Eileen, Norma, Allegra, if folks want to reach out, what's the best way for them to reach you? Are you good with LinkedIn? Are you on any other social media?
Yeah, definitely good with LinkedIn. I've seen the requests start to come in, so I'm happy to connect with anyone after there.
LinkedIn is great.
Okay, wonderful. Well, thanks, everybody. I think we do need to wrap up. Really appreciate the panelists, Eileen, Norma, Allegra. Thank you so much for your time. Big thanks to AMITA, the MIT Southern California Club, and also Midas. I've dropped links in the chat in case you want to check out what their events are coming up next. And also just keep in mind that there's a lot happening around AI. So we've got MIT Startup Network leading a really cool conference this year. And, I would just close with leverage the network, everybody that's here is probably curious and has very similar questions to yourself. So certainly reach out. And I always say that, as you're building or pivoting, even if you're asking for, fundraising, just always know that one introduction from one call can really just expand your network. And that's sort of what I sort of base my, networking along with, is really just asking for one introduction. So I hope for everybody who's, looking to really expand, please do that. Please reach out to everybody that's here, and we'll try to get some very similar content again in the next couple months. Anu, Jagjit, anything else that you want to add before we wrap up?
Just thanks for a great event on behalf of the MIT Club of Southern California, and we'll see you at future events.
All right, wonderful. Thanks, everyone.